Hello, good evening. In last lecture, we finished partnership first first chapter of partnership. Today we start from now. मागच्याच आपण पार्टनरशिपचा पहिला चॅप्टर सुरुवात केला होता. आज आता पुढे जाऊया त्याच्या. Yes. हे आपण फिनिश केलं होतं. आज आपल्याला हे स्मॉल एंट्रीज बघूयात आपण आज. जेव्हा पार्टनरशिपचे अकाउंटचे प्रॉब्लेम सॉल्व्ह करतो तेव्हा आपल्याला बेसिक हे P&L अप्रोप्रिएशन, बॅलन्स शीट आणि पार्टनर्सचे कॅपिटल अकाउंट हे 3 अकाउंट्स प्रिपेअर करावे लागतात आणि त्यानुसार हे वेगवेगळे फॉर्मॅट त्यांनी दिलेले ते जस्ट एकदा तुम्ही बघून घ्या. तर first entry for division of profit and loss. As we say, the partnership business is written down in partnership deed. So as per the rules, they distribute profit and losses their own ratio, which are described in partnership deed. A and B are the partners who have started business at sharing profit ratio 5:3 ratio. A and B contribute rupees 60,000 and 50,000 respectively as their capital to partnership business. They made profit rupees 30,000 for the year end 31st March 2000. Profit and loss appropriation account 30,000. They describe in 5:3. The ratio will going to be 18,750 and 11,250. So as per the distribution, we just enter in balance sheet. Sorry, P&L appropriation account. In debit side, to balance of profit transfer 18,750 in inner side and B also 11,250 inner side and outer column 30,000 and which is transferred to net profit which is 30,000. So this is the entry. And next, these are transfer in capital account in credit side. P&L appropriation account profit sharing 18,750, P&L appropriation account 11,250. So these are the terms which are for profit. Same the interest on capital also one of the term which is enter in adjustment. See, the interest on capital is not paid in cash, but it is adjusted to partnership capital account. Interest on capital account is open to record such interest. It is debited in interest on capital account, the credit of the partnership capital account. At the end of financial year, interest on capital account is close to transferring profit and loss appropriate account, and doing so the profit and loss appropriation account is debited and interest on capital account is credited. So the interest on capital account debit to partners capital account debit is credit, being interest on capital record, and the reverse entry the profit and loss appropriation to interest and capital interest on partners capital account. So being transfer of interest to capital accounts. So this is the entry is same here in the drawing side also. When the drawing in cash term or credit term, they given different entry to posting. After that, partner salary is particularly the partnership business may be given a monthly salary or commission of on sale profit as per the partnership agreement provision. It is not paid in cash but the credited to the partner's capital account. Journal entry for the same is below. Sales salary commission account debit to partners capital account credited, being salary commission payable. Profit and loss appropriation account debit to salary commission account credit, being salary commission transfer. Loan, when the partners are up for loan, at that time partner may bring amount excess of his share capital in partnership. Such excess amount contributed him to the treated partner's loan. Such amount is recorded in partnership partnership loan account. As per the Partnership Act, 6% interest per annum is allowed to such partners loan. Such interest is not paid in cash but the credit to the partnership current account. See here one problem is there. On 1st April 2000, Shri More, Khere and Bore started public business in partnership by contributing 80,000, 60,000, 40,000 respectively, and capital partnership did as provide following items. Profit sharing ratio will be 4:3:3. Shri More as an active partner in business is to be received 5,000 as a monthly salary. Interest on partners capital is to be allowed 6% per annum. Interest on partners drawing is to be charged at 6% per annum. Partners had been withdrawn the following amount. A on 1st October 2000, Shri More withdrawal business for personal expenses 10,000. Shri Khere withdrawal from business for, for personal contribution is 8,000. Bore withdrawal from business for the personal expenses 6,000 at the financial year after financing amount and after deducting the interest on capital, interest on drawing and more salary, etc. The net profit of the business was 50,000. On the basis of above information, you are required to prepare journal entry. Also, the prepare partners capital uh, partners drawing account. So first we prepare for journal entry. Journal entry as per so the first cash account debit 1,80,000 to More, 80,000 to Khere, 60,000 and to Bore, 40,000 being cash distributed by them. More drawing account debit to cash 10,000, 10,000 being amount withdrawal for personal expenses. Bore drawing account debit 6,000 to cash being amount withdrawal for private expenses. Khere drawing account to cash 8,000. Interest on capital is 10,800. More, Khere and Bore, which will be 4,800, 3,600, 2,400. Salary 6,000. The More capital account 6,000. More drawing, Khere drawing, and Bore drawing. There will be 300, 120, 120. To interest on drawing account is 540. Profit and loss appropriation account will be More, Khere, and Bore. The capital account 20,000, 15,000, 10, 15,000. More capital and Khere capital, More capital, which will be 10,300, 8,120, and 6,120, which will be transferred to drawing account, which will be 10,300, 8,120, and More's account 6,120. So, being the drawing accounts are closed. So, these are the entry which will be shifted in their respective accounts like More's capital, More's drawing, after Khere's capital, Khere's drawing. So see one More two balance brought down balance which will be shifted here when we actually start our problem. So by cash account 80,000, which will be the capital account balance starting, which we call two balance brought down, but here they transfer in cash. So the 80,000 will be in cash sense. By interest on capital, which is 4,800. By salary 6,000. By profit and loss account 20,000. So this will be total drawing 10,000, 10,300 and balancing figure 1 lakh 500. Same here in More's drawing. More drawing account. Uh, More capital account 10,300. Cash 10,000 and interest More capital and More's drawing. There will be the entries Next to that, they and they posted entries in drawing theory and capital account, Bore's capital account. Same year, Bore's capital account. This is cash account. See, the three entries are there. Drawing More, More and Khere, and More, Khere and Bore capital account. The transfer and balancing figure will be shifted 1,56,000, which will be entering our balance sheet. So these are the primary entries which will be helpful for when we have interest on capital and interest on drawing. There will be entry. At that time, you posted these entries in your accounting system. The main problem is different. This is primary case for accounting process of partnership. So in next term, salary or interest on outstanding or prepaid. This term will be calculated in a problem with when we start our problem sessions. Uh, Before that, the one main difference is coming. One difference will be the fixed capital method and fluctuating capital method. Under the fixed capital method, under this method, two accounts are to be prepared. One is capital account and second is current account. In fluctuation capital method, there will be only one account, which will be the capital account. In fixed capital method, the capital contribution are recorded in capital account and all other transactions related to capital are in current account. Capital account shows the fixed amount of capital for the year to year. The absence of fresh introduction of capital into business. Under this method, the balance sheet show the both capital as well as current balances in the absence of introduction of fresh capital. Interest is calculated on the beginning of the capital amount only. Under this method, the only capital account in fluctuating capital method, the only capital account is to be prepared. All transactions related to capital are recorded in capital account only. Capital balances charged for the year to year only transaction related to the capital and record the capital account. Under this method, balance sheet show the capital balances only, but the interest on capital is charged on changing balance of the capital account for the year to year. So these are the main difference in capital method and fluctuating capital method, fixed and fluctuating. This is very important difference which in many times the examination will be uh, contribution is there for this distribution or difference between. So you just read it carefully and memorize it, so which is very helpful in your exam. After that, they give one example. The next term is partnership agreement. The partnership agreement is central to the partnership exercise and necessary to settle dispute. Misun- Misunderstanding and difference among the partners is conducted business. It is necessary to register written partnership agreement with the government provide of the Indian Partnership Act 1932. The application on such matter on which the partnership agreement is silent. The partnership agreement conduct the provision regarded name, partnership nature of the business, and the period of capital contribution of the partners and their participation in management ratio of profit or loss. The partnership agreement is central to the partnership exercise. It is necessary to settle dispute, misunderstanding, and difference among the partners in conducting the business. It is necessary to register written partnership agreement with the government. Provide of the Partnership Act 1932 are applicable on such matter on which the partnership agreement is silent. Partnership agreement um, contain the provision regarding the name of partnership, nature of business, and the period capital capital contribution of the partners and their participation in management ratio of the profit and loss, the partners drawing and the interest thereon, the interest on partners capital, salary and commission to the partner, admission of the new partner and retirement or death of the partner, rights and duty of the partners, method of the settlement of the partner dispute, partnership account, and goodwill valuation and dissolution of the partnership firm. So the partnership accounts method of keeping accounting in the same of the sole trader as well as the partnership, but the sole he has not to make any rules for capital, salary drawing, etc. Such partnership has there is great difference between sole trader and the partnership account. Partnership has kept following books of the account like purchase account, what they call purchase book, sale book, purchase book, purchase and sale return book, the debtors, creditors, ledger journal, capital, cash book, and record of the cash transaction. So partnership related account like capital account, current account, drawing account, loan account, which is related with partners. Partners trial balance. Every business organization want to know excess and true information about the net profit or loss at the end of each financial year. It is the financial position, creditors and debtors, etc. Such information can be obtained by the partnership only after the preparation of its final account. Trial balance is to be prepared for the uh, pre preparation of partnership final account. It is the end of financial year ledger account and the balance to know their balance debit credit balances. Trial balance is prepared by taking debit and credit balance of the ledger account. It is debit and credit column of it respectively. The tal- tallying of the trial balance show arithmetical accuracy of book of account. Trial balance may not tally due to the mistake in written account. Such as mistakes are to be found out and it is to be uh, told uh, total if we are urgent in preparation of final account, there is no sufficient time to find out a such mistake. Then difference in trial balance is temporary debit or credit such suspense account, and trial balance is to be tallied during the next financial year. The mistake are to be found out and there was the rectification and ultimately the suspense account is closed. So accounting is a double entry principle, double effect of the transaction are to be recorded. Therefore, the trial balance must be tallied. It show only the arithmetical accuracy of book of account. It is does not mean that the accounts are closely written because the mistakes like the omission of the transaction, wrong head of the account, um, wrong entry to be original record, comprehensive error of principle may be correct. Then such mistakes are to be rectified in trial balance and is to be prepared. So how to prepare trial balance? The to prepare the tally trial balance trial balance all accounts are to be balanced to known as their debit or credit balances. Following 3 points are to be kept in mind for the same. If the debit total of the ledger account is greater than it is credit total of the account shows debit balance. If the credit total of the ledger account is greater than the debit total, the amount shows in credit balance. If the debit and credit total of the ledger account are same, then the account is said to be square up. After the finding out a ledger balance, following points are to be kept in mind on preparation of the trial balance. All expenses account show debit balances, all assets account show debit balances, all income and profit account shows credit balances. All library account shows credit balances for following specimen. We should know the partnership trial balance. See, in debit balance, opening stock, plant, bills receivable, partner, registration of register, uh, cash balances, bank balances, sundry creditors, tools, grease and oil. These are the debit balances. Credit balances like capital, current account, industrial development bank, bills payable, cash, sales, salary payable. So this is the format of trial balance. In examination, you are given one list. You just distribute it in credit side or debit side. After that, partnership final account difference, different adjustment provision and appropriation.
Hello. Hello. लेक्चर संपला का मॅम? हॅलो. लेक्चर संपलं मॅम?
नाही, सॉरी.
लेक्चर संपलं
नाही, अजून 15 मिनिट्स. तर ह्याच्यामध्ये असं आहे की ते म्यूट वर गेलो होतं. आता माझा आवाज क्लिअर येतोय तुम्हाला? आता माझा आवाज येतोय क्लिअर?
नाही, ब्रेक होतो.
येतोय? मला येत नाही कारण. येस. आपण युनिट 5th स्टार्ट केला होता, पण म्यूट मध्ये गेलो होतो. मी पुन्हा रिपीट करते. पार्टनरशिप फायनल अकाउंट इन डिफरंट ऍडजस्टमेंट अँड प्रोव्हिजन ऑफ द अप्रोप्रिएशन. Introduction. At the time of preparation of final account, after the tallying the balance sheet, It may be noted that the some transactions are omitted to be recorded and some transactions remain incomplete to be recorded. So the transaction occur at the end of the year. Some transactions are recorded after the preparing of the trial balance. We call them as adjustment, provide the appropriation to be record above the transaction adjustment entries are made. The subject of the description for the preparation of financial final account, the provision of the Partnership Agreement Act 1932 are to be considered. The partnership cannot come into exist without the oral and written agreement. Providing the partnership agreement are given at least in last unit, but in case the dispute among the partners are in the absence of partnership agreement. Provide of the Partnership Act 1932 apply. Therefore, the provide of the Indian Partnership Act 1932 the necessary to be considered as a preparation of a financial final account. So they are say in Partnership Act or partnership deed there will be must for the preparation of the financial statement of partnership business. What will be contained in partnership deed and various adjustment accounting to be partnership act 1932 profit and loss sharing ratio and of the partnership equal if it is not given in the partnership act. Partnership not enter into relative salary and commission. It is not has right, there has to be separate provision for same. Partnership has no right to demand interest and capital if the provision is not made with that respect in partnership agreement. Partnership has the right of demand interest on the partnership uh, partners drawing and the partners if the rare interest not provide in the partnership agreement. The partnership is entitled to receive interest 6% per annum on excess of amount of capital contribution the partnership to the partnership business. Majority is to be taken into account to settle all dispute and take a decision. Difference between the financial account of the sole trader and the partnership. So it is the end of the financial year, the sole trader are to be written after the calculating gross profit and net profit. Balance sheet is to be prepared to known as the financial position of a partnership. It is out on at the outset there is a no difference between the sole trader and the partnership final account. The excess of following point, the net profit of such financial year is to be partnership is to be distributed in the ratio among the partners as per their provision of the partnership deed and the partnership act. All partners capital account are to be shown in separately in the partnership balance sheet. Sometimes such partners' capitals kept fixed and necessary adjustments shown in partnership current account. The balance of partnership current account is to be shown in the balance sheet among with capital. So they are given different adjustment like closing stock. They given effect also. First is credit to trading account and second is in asset side of balance sheet. In adjustment, they are given closing stock, the market value and book value, whichever is lower, which we opt for this adjustment. Next is outstanding expenses. Outstanding will be treated as a profit and which the added in respective head, and second effect will be come in uh, liability side of balance sheet. Next, there will be prepaid expenses, which will become first to deduct from respective head, and second is shown in asset side of balance sheet. Next is outstanding income and outstanding expenses. Outstanding income or outstanding due but not received. Current financial year, uh, year, the income yet to be received is taken to be credited from profit and loss account. It means the total income of the financial year is necessary to record if the main means that the income outstanding is to be added respectively income to be arrived in total income of the financial year to be shown in financial account effect. It is the added in respective income, and second is to be shown in assets and asset side of uh, balance sheet side. Next term will be income received in advance, which will be treated like a prepaid expenses. Capital balance, sorry, depreciation. Depreciation is most important adjustment in your accounting process. Depreciation, the respective head we deduct from this amount and from asset side, and the second effect will be debit side of P&L. Doubtful debt also saying deduct from debtors and posted this amount in P&L debit side. So these are the main entries which we posted in our account system when we prepare partnership business. If anybody want any question answer, so please ask questions, ask loudly. Any doubt or any query is there?
No, madam.
No?
No.
It's okay. So here we stop here. In next lecture, we started for preparation of partnership final account. Uh, till then, we stop here. If any doubt is there, so you can ask me.
No, no,
No?
no.
Okay. So we stop here.
Yes.
Okay. In next lecture, we come here and we start for partnership business. Till then, goodbye.
Okay, ma'am.
Okay. You can leave